5, 4, 3, 2, 1, 0. All engine running. Liftoff. We have a liftoff.
Hello, space enthusiasts. Welcome to another episode of the Space Business Podcast, where we investigate all the exciting ways in which people participate in the new space economy by conversations with entrepreneurs, executives, investors, and other members of the space family. My name is Raphael Rodkin, and I'm an investor in and advisor to space companies. Just as a reminder, this podcast is for informational purposes only, and nothing should be taken as investment advice. This podcast is sponsored by NanoAvionics, a satellite bus manufacturer and mission integrator. Their satellite technologies enable many space companies worldwide to offer services that improve life here on Earth, such as providing global connectivity, conducting Earth observation for various purposes, or contributing to scientific discoveries. Check them out and also check out my episode with their CEO and co-founder. Sadly, I am not a rocket scientist, but I'm an alumnus of the International Space University, or ISU, which is also our partner in this podcast. ISU offers a number of educational programs about space worldwide, ranging from executive courses lasting a few days all the way to a one-year master's. Check them out at isunet.edu.
So this is the first episode with space investors. By the way, we will have more of these too. But a special kind of space investors. Space Ventures is setting up a platform where regular people can crowdfund early-stage space startups. The founders Burnett and Brant Arseneau will tell you all about it during this episode. For full disclosure, I'm an advisor to space with regard to evaluating potential investments. Please enjoy my conversation with Aaron and Brant. Hey guys, it's time for another episode of the Space Business Podcast. Today I'm joined by my friends Brant Arseneau and Aaron Burnett from Space Ventures. Welcome, guys.
Hi. Hey, thanks for having us.
It's my pleasure. Guys, Space Ventures. Well, it has the word ventures in it, so we obviously know it's about investing in some form, but why don't you guys tell me more about what makes Space Ventures special and different from venture capital firms?
Yeah, sure. I'll jump in and start. So what we're really trying to accomplish with Space Ventures is solving a few different problems. But, what really makes us unique is that we embrace and just, bring in as many of the public investors as we can. And we utilize a few kind of interesting exemptions to do that. That's mechanisms and financial products and things like that. I won't bore you with that. But really what we want to do is connect all the space enthusiasts or space geeks, as I call myself, into the industry, allow them to have meaningful access to companies by investing and actually being a part of the new space industry and, putting humans into space eventually, not just individual, but, taking all of humanity and our economy into space in general. So, that's really what makes us totally different. In addition, right, we really focus on the early stage space companies, right? This is perfectly situated to where we can bring in companies that are maybe a little bit too risky for venture. Maybe they're just a little bit ahead of the curve, but we're really doing some really cool things and allow us to diversify risk across a large number of people, utilizing different mechanisms to allow for investing with the public and things like that, and get all of us space geeks involved early on.
I have to chime in. When you said public investors, just because I sit in Europe, and in Europe we have big governments, you don't mean like public investors as in terms of governments. You mean retail investors, right?
Exactly. That's a great distinction. Yeah. When I say public, I mean, the technical term in the US is, a non-accredited investor. There's distinctions between accredited investors and non-accredited investors. The majority of the world qualifies as a non-accredited investor. So anyone can invest. And yes, it would be a retail non-accredited investor.
A visual way to think about how Space Ventures is in the grander capital formation scheme is if you think of capital formation as a bunch of gears and engine that is driving one another. I view Space Ventures as a very small gear in the middle of all of this, driving 3 or 4 different things. One is we're driving and democratizing access for the public to get involved in investing early on where it's difficult. We're also driving another gear for, as Aaron said, startup companies that are probably pre-VC, often pre-revenue. And then the other thing is we really feel that we're part of the greater institutional capital formation formation, where we plug into follow-on investors like VCs, like private equities. And that's one thing that we believe we solved with this platform, with the help of the SEC and FINRA in the United States, changing the rules and making financial products that we raise under more compatible with follow-on investors. So we feel that we are a kind of a pre-processor to institutional capital.
I'm going a bit more detail there, so because we're throwing around these terms, accredited investor, which people might not know. If I remember correctly, and this is the type of stuff we learn in these regulatory finance exams that I'm sure you guys have taken. I took once upon a time, a long time ago. I think this is something in the US where to be quote unquote accredited, like would be a person or family where you earn at least like $200,000 or something like that, or have like a net worth of like $1 million. Is that roughly right?
Yeah. So the accredited investor definition is actually undergoing some slight changes and nuances, and potentially is kind of opening up. But up to date, it's always been $200,000 per year in income, or a net worth of $1 million or more, minus like some of the technical rules. I won't give the exact definition, but that is one way of determining if you're an accredited investor or not. There are also some new rules that allow for people with like Series 7s licenses and things like that to be an accredited investor.
And the reason behind this is quite timely, as we saw a couple of weeks ago with, this short squeeze of GameStop from public investors. And really what that's about is the SEC, which is a regulator in the United States, put rules right after the crash of 29 to protect retail investors, to protect the public. After 1929, a lot of people got hurt because there was no rules in place. So they put relatively draconian rules in place. And what that did was, for many, many years, excluded the retail investor. And partially the saying, the rich gets richer and the poor get poorer, came from that. And they felt disenfranchised over the last 100 years or 90 years. And the SEC came in early, I think around 2013, and said, okay, that might be too strong of a statement where people of a certain economic level cannot participate in private markets. So what they did was they tried to create a middle ground and said, okay, you can invest in private equity, but we're going to limit the amount of capital that you put in. So we do see this democratization both in the private market and the public market. And there's really good conversations going on. And should we regulate this further? Because, with the short squeeze, which is a method used by sophisticated Wall Street hedge funds and banks, now because of social networks and the interconnectivity of the retail market, they can accumulate enough capital to do similar things. So we're going to see a lot of conversations in the next year or two about should we regulate more or should we democratize more? And it's a really fine balance. It's hard for the governments to get it right.
If I understand it correctly, so where we are right now is basically to invest on the Space Ventures platform. People do not have to be accredited. Obviously, you accept the accredited investors as well, but you do not have to be accredited. And furthermore, there is still rules in place, if I heard you correctly there, that they also can't go and sort of like bet their entire life savings on a space venture investment. There's sort of like a certain limit they could invest with you guys. Is that right?
Yeah. There's actually a it's not too complicated, but it's a small algorithm to say, how much you can invest in any given year. In essence, what that number kind of looks like for most people is in the $2,000 to $2,500 range per year that you can invest. That can go up if you make enough. And like we have a calculator on our site, and other platforms have calculators on their site to help make that, kind of calculation easy for folks. But yeah, it's anyone, quite literally anyone can invest. That calculator kind of helps determine how much you can, risk in any given year, because that's really the whole point here, right? That the SEC is trying to protect folks. So, let anyone in, but make sure we're not, making some, unwise decisions financially by over leveraging or putting too much into very risky investments. Because at the end of the day, no matter how cool and stuff space can be, and any real private investment, early stage investment, right? It's risky. A lot of companies fail for way too many reasons to even list. So there's kind of a nice mechanism that allows for access, but also to create some protection for investors as well.
Yeah, it's kind of nice, right? As you say, because some of the biggest money has been made recently in recent years in the private markets, and really it has been exactly this area that the non-accredited investors were excluded from. So it's quite nice that they now have a way to access that. Do you already, I think your site is open, correct me if I'm wrong, for sort of pre-registration. Do you already have sort of an idea of like what kind of crowd you're attracting? Like, is it a lot of college kids who think space is exciting? Is it like something across the board? Is it a lot of engineers? Is it people who work at space companies? I don't know. Is there any sort of like interesting trends you're seeing?
Yeah, that's a great question. Back it up a little bit to give a little bit of my background. Like I'm not an engineer or aerospace engineer or anything like that. I'm just a space geek. I saw, just like everyone else, Falcon Heavy, the first one, live stream take off, and the boosters come back and land side by side. And quite literally, my brain broke. Like I just couldn't figure out how something so science fiction-y could be real, and I needed to be a part of it. And so the background there helps to understand the types of people that we have. We have some folks that are engineers at Lockheed Martin and fill in the blank aerospace company, SpaceX, Blue Origin, what have you. And we get a lot of traction with that kind of stuff on the marketing materials we put out there and things we share out on the internet. And then, there's others that are just young people coming out of school and they just want to be a part of it, or older and accredited investors that have always been a space geek. I think Brant kind of falls into this category, and he can tell you that story, right? Sitting in the closet, watching, pretending to be in the Apollo module back in the day, right? The space geek and space enthusiast is a very kind of a universal interest, right? Not everyone is a space geek, but it kind of comes from all walks of life, all different countries and things like that. So while it does tend to be folks that are interested in technology and have kind of an engineering understanding, that's definitely not exclusive to that. So the types of folks really are very varied.
Yeah, we also had an initial theory on what our market would look like. And if you compare that to other broad-based platforms like ourselves, like WeFunder, Start Engine, Republic, that are really a broad-based platform for any product from sunglasses to jet skis, things of that nature. We kind of analyzed our market. And I've always said, if you look at a typical person interested in space investing, it may be someone that is actually a accredited investor that don't know or realize they're an accredited investor, which is a really interesting segment of the market. I always talk about members of the IEEE being a sample of that market. If you think that's the largest professional organization in the world with 450,000 members worldwide, I jokingly tell everybody, and I'm pretty sure I'm right, that out of that 450,000 members, there's 450,000 space geeks. I'm pretty sure of that. And within that, the income level of that type of individual probably puts most of them in the accredited investor arena, which allows them to invest a little more and have a little more freedom. So we think we're in a really good market. Aaron in the growth marketing team has done some experiments on growth marketing and paying to get people on the platform. And we're really excited with the initial numbers. We think we've been saying in media that we're going to be the largest retail marketplace for space investors globally. And the numbers indicate that that's very possible.
Very cool. And Aaron, you started mentioning the sort of the background story and that you're not originally from space. I think actually none of the three of us are shamefully originally from space, but we're all space geeks. I totally agree with that. How did you guys get this idea, and how did you guys find each other? How did you guys decide to do this?
Yeah, I'll kick that off, and we kind of started a little bit. Really the genesis. My career is all in marketing and community building and things like that. The genesis of my space story is what we've referred to already, the Falcon Heavy. In fact, I don't know if this is interesting to everyone out there, but my wife and I chose to move to the Space Coast in Florida just so that we saw the first one live stream, and we wanted to see the next two in person, and we were able to see that, including the last one that was that night mission that we got to see that out in the middle of the ocean. But driven by the interest and wanting to be a part of it, right? That's what really got me driving and trying to get into this industry. I've also been investing for a long time. Since I was 12 years old, I've had a brokerage account. Not many 12-year-olds have brokerage accounts that were, a custodian brokerage account, but still a brokerage account.
No, they do. So the game. Yeah,
now it's kind of normal, right? It's just like a normal thing for everyone to have that. Back that was kind of weird. So I've always known and been interested in investing. So you kind of see these two interests of mine merging together right around the time Reg CS becoming more and more popular, and I'm starting to see opportunities with private companies, and that's where this drive happens. And along that time, right, I'm also talking with space companies and folks like Brant, right, because he's in the middle of transitioning, trying to get into the space industry as well. And we met up originally, found each other on LinkedIn in kind of small groups, and we spent months trying to figure out what we were going to do. And I said, hey, Brant, you want to join and make something interesting here together. And because I think this is really, really great opportunity. He did his own due diligence, and eventually history happened, right? And we set this up and started really building this out. I think Brant's story is pretty interesting, though, his background.
Yeah. So in parallel to Aaron discovering how he was going to get involved, I started way back wanting to be an astronaut as a kid in Canada, and the being told that the only two real paths were a fighter pilot or a PhD. And because Canada only has 5 jets that we have to share, I'm joking, we have more than that. It seemed like a better or more likely road to do academia. So I did my undergrad in the 80s in neural networks. I was lucky enough to find a textbook by Carver Mead that wrote a book on VLSI and neural networks, and I found that fascinating. And then I did my postgraduate work in Scotland in neural networks. Funny enough, I re-engineered procedural code, COBOL, into an object-oriented representation, and the code came from the European Space Agency. At the end of that research, I applied to the Canadian Space Agency for an astronaut, got a rejection letter, still have it on my wall in New York, and fell into finance like you, Raphael. And 30 years, started at JP Morgan, went to Morgan Stanley and Bear Stearns and Lehman Brothers, and specialized in risk and trading systems and technology, and had a wonderful career. And I was at a hedge fund, my last company, Lightpoint, which was a cloud-native, massively scalable trading and risk system that we were selling to hedge funds. And I was at a hedge fund in San Francisco about 2 years ago. And the hedge fund did VC on one side of the shop and hedge fund on the other side. And I just asked him what they were doing for VC. And he said, well, we're looking to get into space. And I just laughed. I said, what does that mean? That can only mean Elon and Richard and Jeff. And they said, no, there's hundreds of space coming. And I was just flabbergasted and excited. And more, I was just kind of embarrassed that this thing just flew past me. So that was my eye-opening. And I came back to New York and started plotting my exit of fintech into space. And I thought it was very simple. I thought I would just sell Lightpoint for a couple $100 million, just like Elon did, and do whatever I like. It kind of happened like that. Not exactly. The minus a couple $100 million. And luckily I met Aaron with some ideas. I thought I would probably get in VC, private equity, or even get involved with a pure space play. But the path took me here, and it's a really good problem to solve. It's been validated. Aaron and I were going to bootstrap the company, which we did, but we actually got some early VC money from strategic VCs, including Dylan Taylor, that thought we were very strategic for the industry as a whole. And we're finding support everywhere. We thought maybe we'd see some resistance or some defensive posturing from VCs, but we're not seeing that at all. We're seeing very much a lot of support and encouragement from the industry.
I think that makes sense. And, speaking as a VC, as a seed stage VC specialized in space myself, I see you guys as highly complementary. And in fact, I see you guys as so complementary. I guess you guys see it the same way, that I'm on your investment advisory board, should be noted here. Because I think, I think you guys plug a gap in the market, sort of in the pre-seed early seed stage, which then naturally flows into the seed stage of venture capital.
Yeah. And in fact, we always say, Aaron and I always say, once our portfolio companies or our clients get to a stage that we feel they're ready for you, Raphael, or one of our other partners, we'll be the first one to march them right to your front door. Our business model, it behooves us to do that, because our business model, we do for payment, we do take some equity. Aaron and I would love to take all equity, but obviously we need some operation capital, and we'll probably ratchet that up. But it's so synergetic that, as soon as these companies are ready, we're going to march them right to your front door.
Yeah, and something to add to that as well, right, is that space is like an expensive thing to do right now, right? The costs are coming down, but I think unlike some industries where everything's strictly competitive, and of course there's still competition in space. The way we kind of look at it is there's a lot of money to be raised. There's a lot of innovation that needs to happen if we're ever going to go to the moon and Mars and all that other stuff in a commercial sense. And with that in mind, there's plenty of opportunities. Having said that, right, we're now, one of the things that we're thinking about is, and you mentioned this, the IAC, but we call it IAC. It's the Investment Advisory Committee. Brant and I, no matter how geekish or enthusiastic we are, or maybe even Brant's got a lot more kind of engineering mindset than I do. But no matter how good we are at that, we need as much help as we can get, because at the end of the day, we want to protect investors too. We want to give them the best opportunities that are out there. And there's hundreds of space companies, which I think is always a surprise to people, sometimes even in the industry, that there are hundreds of space companies out there. So what we're trying to do, right, is send folks through our investment advisory committee to really make sure that we're giving the public the top 10%, right? Sometimes in the industry with regulation crowdfunding, it's kind of a negative connotation of, well, if they can't get money with VC, they'll go to Reg CF. But that's not the case here. The reality is Reg CF exists to be able to help all these early stage companies to be able to get the best of them. And that's really what where we're focused, is the top 10% of space companies, bringing them out.
Yeah, in fact, the companies that don't get, we have two levels of filters, an internal filter, and I'm not sure if Aaron mentioned, but we initially had nearly 100 companies apply to raise capital on the platform for our inaugural listing. And we took that number and whittled it down to a group of companies that would get in front of our investment committee. What we want to do is take the companies that didn't make it and be constructive for them as well. And that is take all the feedback from our investment committee, including you, Raphael, and make that into feedback for those companies. Because some of them, a lot of them have one aspect that, people are looking for. Either they have a great management team that are highly motivated and very enthusiastic, and or they're in a market that we feel is very lucrative, like compute or Earth observation, or something that we think is going to turn into something. And maybe they even, are close to MVP or product that they're ready to go. Typically, they're not at revenue or post revenue, because that would suggest they're maybe ready for VC. But, those companies that don't make it, we try to be very constructive. And in the future, we'll be sending, the top 10% that don't make it probably to an incubator or an accelerator that we're partnering up, like CDL or Techstars in Los Angeles. But it's really kind of a constructive no, not a destructive no. And I think, that should produce even more companies down the road.
I can confirm that from my experience so far. You're absolutely right. I think it's typically fixable, and then it's great if you can help them fix that. But so I think what's nice for me as a seed stage venture capitalist, you take some of the work off my hands, right? Because you're basically out there providing deal flow if all goes well. And so, which then poses the question, where do you guys get the deal flow from? Like, how do you find the companies, or how do the companies find you, maybe?
That's a great question. So, there's a lot of companies doing cool stuff. I think one of the metrics out there is something like 100 or 150 new space companies coming in every year. And it depends on where you're seeing that. But great partnerships, or unofficial partnerships with accelerators that exist out there, right? Because everyone needs that seed or pre-seed stage capital coming out of accelerators. Folks like CDL, Techstars, and things like that. But then also, part of what we do is try to provide a lot of education and data for the industry with our space base, and that really gives us the ability to see almost every single company. I mean, I'm sure we've missed some, but we have spent quite a bit of time looking at hundreds of companies, and we track 1,500 right now. We'll be adding to that list. We've probably, I assume that we're probably close to 80-90% of the industry with that number. We look at them all individually. So basically, if we ever need to go find a company, we just go into our own data set and say, okay, this is a really interesting company we liked when we originally looked. I wonder what their capital plans are, if they're looking for some more raising or some seed funding or what have you. So there's a variety of sources, but we see a lot like one-to-one, right? We see them all coming through our data set.
What we've started is a product called Spacebase, which is, for lack of a better word, Crunchbase for space. But it starts as a very proactive data acquisition process. Of course, a lot of the data we're looking for is very opposite to Bloomberg and Reuters, where you have public encoded data. This is private data embedded in news articles and stories and websites. So to pull it out, you need sophisticated machine learning AI tools, which some of them exist and we're experimenting with them. But in the short term, we just are going to brute force it through people. So we have offshore, we've found very, very high value resources that we call data quality engineers that are perusing key websites and news outlets every day. They run processes looking for new companies, looking for new data on companies that we have. And then we're actually creating a new ticker tape which it sounds a little counterintuitive because a ticker tape is usually for fast-moving data, but we're creating a ticker tape for private companies that you'll be able to see new events like a revenue event, a funding event, a team management event, a new partnership event. But we're dedicated a lot to this effort. And for another reason, not just for the good of the industry, but our platform users, while they may visit the platform weekly, we want to make sure they have tools and data daily to come back and start doing their research. So we think that's going to add a lot of deal flow, a lot of information for both us and the industry in general.
And that data is available for free on your site, or how does it work?
Yeah, it's available right now. It's pretty public. Right now, we put out a public, just kind of, it's basic data set right now. It's pretty simple, kind of a few lists of pretty simple data. We're building out the robustness of that data. But yeah, it's entirely public. Maybe at some point in the future, as we start to add more depth, there's opportunities for, paid accounts and things like that, and power tools and all that great stuff. But the real purpose for us is to be able to provide the education, because what I found as a relatively new person in the space industry, what I found is the economy, the markets, the industry itself, rather than just the technology, was almost itself like rocket science. I mean, it wasn't all that easy to understand how the markets work. So we want to make it so that someone coming to the site doesn't have to spend months like we did trying to understand the industry. We want to be able them to understand it at a much more visceral level quickly, and then be able to take that on.
Yeah, I think we're going to have a tool that's very, very useful to our probably three levels: one to the public, one to members of the platform, and then a super user version that might be for institutions like VCs, private equity firms. But we're going to try to give as much value to the individual as possible, and certainly not get as far as the traditional market data providers. The $15,000 to $2,000 a month type of thing will avoid that type of model.
Happy to hear that. And so that's going to be a great tool, as you said, also for you guys to sort of proactively find companies. But let's say if somebody like a founder, sort of pre-seed stage, is listening to this podcast, and they want to apply to Space Ventures because they think they might be a fit. Like, do they go to your website, or how does that process work?
Yeah, so we have a couple of avenues to get on our radar. One would be to just get on our data set. So, we take extra information, right? It's kind of like being in private companies. You do tend to, like when people volunteer some of that information that wouldn't necessarily be on a public website or something like that. So we always take that. The other thing is there's actually an application link. So we kind of have a couple different areas on the website right now that you could go in and just drop an application for, to apply to actually raise on our platform. And right now what we're doing is narrowing down our first tranche of companies that we're going to launch for our platform here in the next month to 2 months. And, so any applications that come through, we review. They go through several layers of kind of due diligence and screening, and then eventually through the IAC and then onto the platform, assuming all goes well.
And so let's just dig a little bit into sort of what kind of companies can apply, because that's a question always that also we asked ourselves for as venture investors when we set up the venture fund, sort of like, what is a space company for you? Is it sort of like all the subsectors of space? Is it like, for example, I don't know, like I have a drone company or I have a widget company, and my widget you may be able to use in space, or sort of like, how do you delineate the definition of space companies?
Unfortunately, there's not just a strict, easy black and white kind of answer on that, right? Of course, there's a little bit of variation. Now, what we like to see are things that generally, from a principled perspective, things that generally do have a harder time raising kind of traditional VC. So if you are, I don't know, like an Uber or a DoorDash, and you have GPS, I think that's fine. You could go ahead and you probably will be able to raise money somewhere else. We don't really exist for that per se. We more tend to focus on space infrastructure and things like that. Now, having said that, there are a lot of companies where you don't have to just make a spacecraft to be able to raise on our platform. There are a lot of companies that focus on space data, for example, right? But it's very space centric. So it tends to be a little bit touchy-feely when as far as like trying to find a line. And part of that will develop as well, right? As we start to see more and more space companies come in, maybe we can find some more areas of focus. We try and hit all the different sectors of space as we define it, and then try to really provide value for early stage companies that they have a hard time going to traditional kind of software VCs and things like that.
Yeah, and there's also another lens we like to put on it for ourselves, and that we recommend issuing companies put a lens on, and that is this attractive, or can you put a narrative around it that it's attractive for the public? Can the public understand it? So, for instance, and I personally love multi-axle reaction wheels, but I don't know if the public is into that. And maybe you can make that interesting. I think it's challenging. And then there's another aspect which is really interesting when you contrast VC versus this platform is B2C companies that actually have an end consumer that is a consumer, not a business, like tourism, things of that nature, often could get a customer as they get an investor. So it's a great marketing tool. And we like to highlight that to companies, the few companies that are B2C, which I think we know a couple of them.
It's actually an interesting point. I never thought about this in the context of space, but because this is so exciting to so many retail investors anyway, but like you correctly say, Brant, I mean, there just comes a point because it's a deep tech sector where, you know, the knowledge will stop. And frankly, that's even the case for me, and I know for you guys as well, right? Because you cannot be an expert on SATCOM and antennas and rocket engines, and it's just impossible. But you guys thought about sort of like providing sort of basic, education modules, or maybe via partnerships or something like that? I mean, you guys probably know I have my sort of basic space introduction course, which is on a very high level, but I'm not saying it has to be my course, but there might be something that your community might appreciate, right? In terms of getting some education on the sector.
Yeah, and there's a huge aspect for education. So, you know, even step out of space, you just think about Reg CF in general. There's education that goes on in understanding securities and, understanding like just Reg CF rules, as well as just, securities. What's a convertible note? What's a common class C share? What is that, right? Like there's education that happens there. And then there's education that happens specific to space. There's actually a variety of education. We want to provide all of it, not necessarily branded by ourselves, but just be able to kind of aggregate that for our investors. So there's going to be opportunities to help partner with more of the traditional finance education providers, as well as the space providers like yourself and others. And then one other thing that I think where we probably live as far as what we own and provide with content is more on the space finance and space market stuff, right? That's where we shine.
Yeah, and just a little more on that, and because we're an entity regulated, and we follow the rules of FINRA and the SEC, so there's certain things that we have to do very properly, and that is to be careful about how we talk about the market in specifics. But at the same time, we want to educate the market, especially around portfolio theory, for instance. We would love to talk to our membership base that we view the space market as subsectors, and these subsectors, some of them are uncorrelated in the relative grand scheme of things, and we feel that they should be investing, not putting all their eggs in one basket, and kind of putting it across these different subsectors. Now, we want to educate our users on that, but we have to be careful on not calling out certain names and making advice to certain investments. So we're going to put a lot of thought into that with the guidance of FINRA and SEC and the rules.
So that's an important point. I think people might not realize that what you guys are doing is a regulated activity, and that you have all of the required certifications. So actually, listening to that, and of course, portfolio theory, I know very well from my previous life. I mean, is there something maybe also that you might at some point in time, if it's not too complicated from a regulatory point of view, offer like a product for like people who are too lazy to basically pick the investments themselves? It's like, hey, here's the Space Ventures basket.
Yes. Yeah. Well, that's a great question. In fact, Aaron and I've trained Aaron to now talk about financial products. So this is, we view now this is not, and I never viewed this as a Reg CF platform. This is a platform for investing for the public. Now, Raphael, you probably know just as well as most finance people, there's more than just one reg under the Jobs Act. And there's Reg CF, which has certain limits and certain disclosure requirements. And then there's Reg A, which is another regulation what they all have in common is you're allowed to solicit the public where Reg D 506B, which is going to start to sound crazy to some of your listeners, but that's the regulation that the traditional VC raises under, and it's for accredited investors. And you're not allowed to solicit the public. This whole Jobs Act is about soliciting the public and combining a solicitation to accredited and non-accredited. So Aaron and I have a roadmap that we have several products planned. Reg A, which is a very interesting solicitation product that you're permitted to solicit the public. It actually has 2 levels of capital. If you think about CF of only going to 5, Reg A goes to 20 million allowed to be raised per year and 75 million. So what's the other aspect of that is you are required to do more financial disclosures annually. So there's a little more of a burden on registration. And then there's such thing as a 506C, which is very similar to a 506B, but you're allowed to do solicitation. And platforms like AngelList use that. And then finally, having some type of index fund or being able to buy shares into the portfolio that we have from the way that we were compensated by all the companies that we've raised for is another product that we're thinking about in the future. So this is really, if you think about all the products and what they have in common, is really 4 companies that are early stage, seed, almost pre-revenue, pre-VC, and have an aspect of raising from the public.
And so what does that translate to? Like, what do you think was going to be sort of like the average raise for a company that lists and fundraises on Space?
Yeah, so that's a great question. So really what we're targeting is there was a new exemption to the Jobs Act, there's a new set of rules that were kind of designed to improve the Jobs Act that just went through and just got voted on in November. There's some time process it takes them to go live, and they'll be going live on March 15th. Those rules allow for raises above 1 million. Previously, you could only raise $1 million via Reg CF, for example. And those new rules really is what created the interest in this for us, because most space companies, specifically seed stage space companies, pre-revenue, they're trying to raise between 2 and 5 million. I mean, we talked with dozens of space companies at this point in this kind of stage of fundraising, and it almost always comes back somewhere in the range of 2 to 5 million. So for us, that's what we're really targeting. We believe we shouldn't have any issue being able to raise those funds for those companies. Some that may be more like data focused and things like that may be able to get away with less CapEx expenditures. They'll be raising 2 million. Some that are raising, more like building rockets and things like that may need to raise 5 million. There'll be a little bit of a range. My guess is the average falls right in between there.
Yeah, and Aaron's right in saying the CF product that we have was we felt very dependent on the new SEC rules. Having $1 million, Raphael, you could probably buy 2 valves and a hose with $1 million. So we helped lobby the SEC and Congress with a bunch of interest groups to get this passed. And because of, the recent spotlight on regulation and protecting the public, it's still very challenging in Washington to get this stuff done. But I think there is a sentiment to try to level the playing field for the retail investor. And with the limits that Aaron talked about earlier, we feel that they're protected and there's some risk limits in place that make sure that they have reasonable risk reward.
But so what does that mean? So let's say there might be companies out there which are not so capital intensive, or they have a very first phase where they might need just $500,000. Is that going to be too small for you guys, or can you also accommodate them?
Generally speaking, we want to provide capital for all those companies. One of the reasons what we just tend to see is the companies that are progressed enough to really, we feel, go to the public tend to be in this more seed stage. What we're finding, though, as we start to talk more with companies, is there are some intriguing pre-seed companies that are coming up. They're kind of like if you use the TRL scale that NASA uses, right? Technology readiness level. They may be in the 2 to 4 range out of 10, where maybe that something could work on our platform. We're not sitting here, we can only raise high amounts, right? Per se, that's not our limit. That's not our, requirement. What we want to do is create efficiency for all space companies moving forward. The biggest need for us is that 2 to 5 million kind of bucket, which is why we're targeting them. But there's going to be some interesting ones, and I don't want to make any promises or anything like that, but there will be some interesting ones I'm predicting coming down the line that are in that more 250 to 500 range that will not be our, we'll probably won't specialize there.
Yeah, and another behavior we would love to see, and I predict it may happen, is when companies are beyond our threshold or our natural demarcation, which is pre-revenue, at revenue, and they move on to Raphael, maybe to your fund or to Steve Jurvetson or to someone like that, is for those raises to allocate back a chunk of capital to space ventures. And why would they do that? Because if you think about the economics on a Reg 506B, the cost of capital is actually bore by the LPs, not by the issuing companies. On our products, the cost of capital is bore by the issuer. So why would someone want to do that? What our theory is, there is a natural excitement around the public getting involved earlier and having that fan base. And as Aaron always tells me, really that cost of capital is marketing. It really is a marketing cost of capital. And I'm looking forward to someone raising 100 million or 250 million like Firefly or Dylan at Voyager and saying, hey, we'd like to allocate 5 million to space ventures to raise that capital from the public. That's really when I think the value proposition has hit its maximum.
So that brings up the questions of the check size on the other side, sort of like, the amounts that the investors can invest and sort of like what's the lower limit there? I mean, I assume there's no upper limit, so to say, or, well, there's going to be some upper limit imposed simply by the situation, but is this something where like the Reddit army, like some guy who wants to spread like $500 over 5 space companies, is that going to be possible, or how's that going to work?
This is basically the opportunity specifically that you're describing is exactly why kind of Reg CF exists. Every issuer gets to set what their lower limit is, right? They could say it's a lower limit of $2,000, or they can say it's a lower limit of $50. It'll probably be in that range. Generally, what you see in the Reg CF industry is somewhere between 50 and like 250 tends to be the lower limits. We want, we try and encourage as low a limit as possible, but the issuer wants to encourage accessibility. So they want to be able to have their mom, their friends, and all that stuff to actually invest in them, and be able to kind of have the folks that are cheering them on. And so reality is like your check size could be $50, your check size could be $250 or $2,500, depending on your individual investment limits per year. And part of what we talked about, harkening back to what Brant mentioned with portfolio theory, is if you only have $2,500 to spend in a year, you shouldn't be putting it all into one company because you're taking an incredible risk. Because there's so many reasons that company could fail, no matter how good the team is or the product or whatever. What we suggest is, if you do only feel like you have $500 to spend, then try and split that up between $50 at 10 different companies, if that makes sense to you, if those limits are allowed by the issuer. So yeah, the numbers range a little bit, but the expectation is that, and the averages in the industry are in that 50 to 250 range as a lower limit. And then you can it's not unlimited on the top end, generally speaking, but it can be larger check sizes in the 25,000 to 50,000 kind of range.
And then I assume what appears on the cap table of the startup is some sort of like a line with like space ventures. So they're not going to have like 1,000 names on their cap table, right?
Yeah, and in fact, that's what we alluded to earlier. The original rules passed in 2013, 2014 didn't allow the use of a special purpose vehicle. So there was some initial structural problems. And Aaron and I spoke to a couple of space companies that raised capital in those early days. And they had two general experiences. One was raising capital was quick and fantastic, and the service they got from the platforms were great. But the nature of the cap table of having 2,000 retail investors on it was very toxic in terms of follow-on capital. So that was one of the topics that we lobbied with the SEC and FINRA, the industry lobbied to get that fixed. That was key for capital formation and us participating, and that now has been done. So you're right. Now what happens is there's an SPV, single entry on the issuer's cap table.
I didn't realize it used to be like that. Everybody appeared once upon a time, and I must agree, as a venture capitalist, if I received the cap table from the startup and there was like a 2,000-line spreadsheet, I'd just close it and like not look at it again.
Right. Well, and Aaron and I said from early on, we said if we can't solve this problem, or if the industry can't solve this problem, it's hard to recommend to an issuing company to do this, because we're almost making them toxic to you and other VCs down the road. So thankfully it got passed, and now we have this structure that is more standard, more compatible.
And let me just add a little bit of, kind of principle to this, right? If you take a step back, again, it comes back to what Brant was alluding to with, we're part of an industry here, right? We're not the solution to everything capital. We don't believe ourselves to be. There's a lot that needs to happen from capital industry in general to be able to make this work. So we always have had a prerequisite for our platform that it works well. It plays well with other capital. It plays well with other players in the industry. It's not we want everyone to just say Reg CF's the only way to go from here on out. There are some people that will make that claim and they'll say, VC's dead kind of thing. That's not who we are. What we believe is that there's way too much money that needs to be in the industry. There's no way one of these exemptions or one of these mechanisms is going to be the only solution. There's always going to be opportunity to play well together and get very promising early stage companies funded and get them to go, all the way through the public, all the way to being public, all the way through that private company to public company life cycle. So, that's kind of the principle behind that.
And I realized I forgot to ask, we're throwing around so many of these expressions like from the US security laws that I forgot to ask about the geography. Is there any limitation sort of either for companies and or investors geographically?
Yeah, so that's a good question. So there's going to be kind of a rollout for us. So technically speaking, with the SEC regulation, crowdfunding is only available to US companies. You'd have to be formed US company and things like that. So we do tend to focus on US companies for now. Plan will be to allow to support for other non-US companies, but that would require, us being in jurisdictions like, Europe and UK and that kind of thing as well. So that's, rollout is US companies focus on that side for now, though there are options. And we do know that space companies are they have in their plans sometimes to open up US shops and things like that. So there's opportunities there. And then on the investor side, there's definite opportunities to have not quite entirely global investors in there. We will probably be launching with US and very soon after that, adding other, support for other countries for investors as well. But that's much more open-ended. You can have, as long as you pass some kind of simple KYC, AML, understood KYC, AML steps, you should be able to have investors from a variety of different countries.
Yeah, so a little more on that, because Aaron and I have had some very preliminary conversations about a global platform. And Raphael, I'm sure you appreciate as much as I do about starting broker-dealers up in different jurisdictions.
Yes.
It is hard. It's not super scalable. But we do recognize Europe and the Middle East and Africa is super important, as so is Asia and possibly Australia. So we've kind of broken the world up in a couple of areas that we think would be a great place to be. Possibly Europe is next for us, but we want to focus on America and North America now to get all that right, to create a good design pattern for the rest of the world. Although we do view it as a global economy and we're going to need to be in more than one place.
Yeah, that makes a lot of sense. And I can certainly sympathize with that. Once you come to Europe, it's almost a separate regulation for every country. So it becomes quite work intense very soon. Brant, before we wrap up here, I wanted to ask a question to you because of your past life of hedge funds and so forth. So at the other end of the fundraising spectrum or timeline, and speaking of retail investors, we obviously have the trend with SPACs at the moment. Any thoughts on that, or generally what you see in sort of like institutional investors and other retail investors and what's happening with space in the public markets?
I got quite a few thoughts on that, and I'm happy to say a very, very large hedge fund in the top 5 invested in space ventures last week. Can't go public yet, but they are very interested in the space industry. They view it as the new infrastructure play. I think Raphael, you'll be quite impressed when you find out who it is. And we've had a theory. I've had a theory. I've been sharing with Aaron for quite a while that a lot of my colleagues in the hedge fund space, it's hard to find alpha in the public markets now. They're starting to look at more private credit, private equity. So they're really the hedge fund is turning into a more diversified alternative shop, and I think there's going to be more. And as you know, their big interest for the last 10 years have been infrastructure. I mean, the KKRs of the world, the Ares Management, the Apollo, they invest a lot in infrastructure through different asset classes. And last year at Milken, I asked a couple, do they view space as the new infrastructure? And it was a resounding yes, absolute yes. So we'll see that capital come in at some point. We all know that usually comes in later. It comes in big, but it comes in late. And then on the public side, it's interesting. I was asked to write an op-ed on paths to the public market. And there's an incredible amount of interest in SPACs. I think, my view on ways to go public is any company that is a good company can choose the way that it goes public. There's a lot of friction in the traditional S1 IPO process, and I think price discovery is proving to be not accurate, obviously. And the SPAC, I think, is lacking the due diligence that the S1 provides. So I think, the conversation that the SEC is having with NYSE and the NASDAQ about direct listings is a very interesting kind of medium level of risk reward of doing a public listing. So I think we'll see more of that. I think we're going to see a lot of SPAC before we see that.
Yeah, I agree. I guess the wonderful thing about it is that compared with even just 6 months or 12 months ago, there's suddenly so many ways that the retail investor can get involved in the space sector, whether it's through you guys or buying like SPAC listed companies. Guys, we always finish up here on the same question, and it's going to be the same for both of you. I assume you guys like science fiction as well, although if you don't, that's also fine. And I'm just curious to sort of hear about some of your favorite science fiction. It can be books, movies, TV series, anything.
Yeah, I'll start because, I think like most everyone, I'm a big fan of The Expanse. Obviously, I did read a lot of Orson Scott Card, and that's those books are like very long. So I haven't read them all, but I've read a bunch of them. And then, one thing that I've just recently done. So while I'm working now, what I'll put up in the background has been my most recent kind of, video that plays in the background is the old Stargate SG-1 series, which I grew up on. It was one of the first things I have memories of watching that with my dad on a Friday night, my dad and my brother on a Friday night. So kind of have that playing in the background, some really old, terribly done, terribly produced TV series. But it's just, it got better as it got older, maybe, arguably. But, it's one of those things. Those are the ones that I enjoy.
I'm older, so mine's going to be more obscure. So, Raphael, you may remember Space 1999 when the moon was knocked out of orbit and they were all trapped flying through the star system. Do you remember that one?
Yeah. That's a while ago. Yeah,
that's a while. So I loved that. And my next door neighbor had the actual ship for action figures, and I tried to relieve it from him a couple of times, but he kept finding it in my room. But Space Odyssey, Foundation, and I'm ashamed to say I've been kind of out of the sci-fi for a while, and I came across Expanse, and I said, how did I miss this? So I just finished it, actually. It was awesome.
The Expanse is certainly, a lot of people in the space community love the Expanse for sure. Is there anything you guys see in the Expanse or other works like that you think should exist in real life and you would like to see on the Space Ventures platform?
I think there's a lot of cool stuff going on. Obviously, like propulsion technologies, I don't think there's anything close to what they have there on the Expanse. I do know of at least one company that's doing an Expanse-inspired technology, actually, and maybe more for a PR thing than for anything else. But there's actually, a lot of cool stuff. I do think, for me, I think maybe just because I'm I don't know, like explosions kind of thing. I like to see the propulsion stuff. I'm always really curious to see some of that. So a lot of the ion technology, or, the ion propulsion technology and some of the others things that are coming down the line are always really interesting to me. But I think there's going to be a lot coming in. I don't know if it's exactly out of the expanse or not, though.
I have two interests, and they're connected. One is natural resources and mining, like our friend Dan Faber started doing. I'm really interested in that. And then on the finance side, I'm very interested in a space commodities exchange that we all in the near future, or hopefully we can go long or short moon water versus Mars water and buy those futures and options, which I'm sure is quite far down the road. But, we hear a lot of crazy overreaching ideas for distributed ledger technology. And they're using it for everything that is just crazy. But I think a solar system exchange using distributed technology would be very interesting.
So that's a great note to finish up on. Brant, let's do that. Like in a few years, we'll start the first extraterrestrial hedge fund. It's bringing together our past and current life. Guys, it's been a pleasure. Thank you so much. Best of luck for the launch, and we'll speak soon.
Thanks, Raphael.
Thanks for having us.
Well, that's it for another nominal episode of the Space Business Podcast. If you like this podcast, please consider giving it a 5-star rating on your favorite podcast platform, such as iTunes. You can follow us on Twitter at podcast_space. Also consider supporting us at www.patreon.com/Space Business Podcast. If the podcast got you interested in learning more about the business opportunities in the space economy, check out my new online course on space entrepreneurship on udemy.com. The link is in the episode description. Lastly, if you have any feedback, including ideas for guests, and that may include yourself if you have an exciting space story to tell, or interested in being a sponsor, drop us an email at spacebusinesspodcast@gmail.com. I look forward to seeing you for the next episode.